What's up guys, Hector here. I'm about to do a quick trade breakdown on gold that I took today. It is Friday, so it is a small trade. My size was very small. Okay, Fridays, if you talk to most traders, losing on Fridays sucks. You don't want to go into the weekend with a loss. So we were just very cautious today. We're just very in and out and just focused on just trading a smaller size. So basically, it was just $80, but more importantly than the actual amount of money is the actual setup. So we're about to do that right now, and this is my broker liquid chart. So if you are shopping around for brokers, they're basically they have a great platform. Their withdrawals are very quick, and I've had no issues with them so far. So right here, gold, let me take all these drawings off. Okay, so gold. So I've mentioned this in other videos and other trade breakdowns. 3 things have to happen, okay? You need to lock these things in. You need to write this down, okay? So the 3 things that need to happen. 1, break of structure. I'm gonna be very quick with this and just straight to the point. Break of structure, okay? Gap liquidity must be tapped or filled. Tapped, filled, okay? 3, price must reject that zone of liquidity and continue in the direction. Can you move this? Okay, so break of structure. Secondly, gap liquidity must be tapped and filled, okay, after that break of structure. Then after it taps and fills that area of liquidity, price must reject that zone of liquidity and continue in the direction that we're anticipating price to go. So I took a short sell today, okay? I took a short sell today. So we're looking for break of structure to the downside, okay, to the downside. We want price to come back up into a level of supply, fill some type of supply candle, a gap, and then reject that zone, right? Number 3, reject that zone of liquidity and continue in the direction to the downside that we expect it to go to. Okay, so this is the setup that I took right here. Let me do this right here. Boom. Like I mentioned, we were in and out very quickly. You could have held it for close to a 1 to 4 at its best, but we got out just after a 1 to 1. We just wanted to just be in and out. If we were in the green, we just wanted to take our little profits. And like I said, I traded a super small size, and we just wanted to just go into the weekend with a clear mindset. That's just me. I don't like to lose on Fridays. Even sometimes, like I'll have a good week Monday through Thursday, and I won't even trade Fridays. I'll just take off because I don't want to go into Saturday like, dang, I just took that dumb loss on Friday. I shouldn't even trade it. But anyways, okay, so 3 things that have to happen. Break of structure, okay? So we have, when we zoom out, we have 2 key breaks of structure, okay? There are some levels of supply right here that are pretty important, okay? These levels right here. These levels got broken, okay, right here. Right? These levels got broken right here, break of structure. When we zoom out, we can actually see that there's a level of supply up here / resistance that price is struggling to break to the upside. So now we have an indication that price is struggling to break to the upside, okay? So tap, rejection. Price kind of mingles around here for a little bit, then tries to come back up, break these highs, fails and rejects, and then we get this clear break of structure right here. Okay, clear break of structure right here from these zones right here. Okay, price breaks down. That's a break of structure. Comes back up and fills a gap / liquidity. Where is that? That's right here. That is right here. I'm getting kind of passionate here because like this is just it, man. This is the setup, guys. I'm telling y'all, this is game right here. And I'm just trying to scale this up. Okay, gap is right there. Price comes back up, rejects this gap and starts trending back to the downside. Then we have another break of structure closer to our kill zone. So this shaded area I've mentioned in all the trade down breakdown and on all the trade breakdowns. You can go back and look at those in my the ones I've done on my channel, and you can see that this is my kill zone, this shaded area. This is where I'm looking to place trades, okay? Then we have another break of structure at this level, okay? Price broke these levels of support right here, okay? Price broke down, indicating that price wants to shoot down, okay? What do greedy, fear of missing out traders do? I say this because I did this, okay? I'm only speaking on this because I actually did this. Okay, traders, when they see these candles right here, these purple candles, which are red candles, I just had this as blue and purple on my dark mode. When they start breaking down like this, 1, 2, 3, 4, 5, and there's no pullbacks, they get FOMO. So they get in right here, they get in right here, they get in right here. Then price shoots back up. They get scared out of the market. They take their loss, and the snipers are being patient, disciplined, waiting for what? Number 2, gap liquidity must be tap filled. Okay, so snipers are waiting for number 2. They're waiting for price to come back up and tap a level of supplier liquidity. Where's the gap? Right here. There's a gap right there. If you don't know what a gap is, go back to my other trade breakdown videos and go see me explaining more in depth what a gap is. Look how this candle shot up, then this candle broke this candle, filled that gap, rejected, and then started coming back to the downside. Okay, this is where we got in. I'm giving y'all a game right now, man. A lot of people don't go into this type of detail, okay? And then we took our profits down here, right? So break of structure, okay? There's that main break of structure up here. Remember, right here, from these levels, these levels. Okay, price created some type of support right here in this area. Okay, 1, 2, 3. Then it came back, filled this gap, rejected, and then broke structure from these previous support levels that it was holding. Okay. FOMO traders get in right when this candle breaks, somewhere around here or right here. Worse, they get in when this candle breaks this zone, right? When this candle broke this zone right here, right? When price broke this zone, they got in. They went in for a short sell. Then they got wicked out and price went back up and they got scared out of their trade. Those traders lost money. Snipers were patient and waited for number 2. Gap liquidity must be tapped and filled. There was a gap right here after the break of structure, right? Break of structure right here. Gap comes up, price comes up, hits the gap, and then rejects that gap and starts trending back down. Okay, we have to wait for all those 3 things to happen before we even execute. 1 and 2 can't happen we can't execute on 1 and 2 without 3 happening. Okay, so gap because price can come back up to this gap, and then say you get in at the gap when it hits this gap, and then price just starts shooting up and actually comes up until this area first, and then it starts shooting down. Okay, so we want to see the rejection. We want to see number 3 right here. Price must reject that zone of liquidity and continue in the direction. And that's the setup that we're looking for every single day. Okay, like once you find your A+ setups, once you find a strategy that resonates with you, you have to stick to that strategy. You have to look for that strategy in and out every single day. If you start bouncing around to other strategies, you're not going to know what to backtest. You're not going to be able to look at your past data, your wins and your losses, and see where you're going wrong, because you're going right, you're doing right, and you're doing wrong on all these different types of setups. You don't know what you're doing right, okay? So when you lock in on one strategy, maybe 2, you backtest that strategy day and night, okay? You backtest that strategy day and night. And even then, once you feel confident, you go in with small amounts. Risk $10, risk $20, risk $100, like whatever it is, and just build that confidence, get those small wins that will build that confidence. And trust me, it's a snowball effect. Okay, so where I'm at my trading right now is I feel super confident with my setup, and I'm just focused on just scaling up and growing from here. Okay, so that's it. It's quick. It doesn't have to be long. That's That's the criteria, okay? Break of structure, 1. 2, price must come up and fill a gap or a level of liquidity. It must be tapped, it must be filled. Okay, and then price must reject that area of liquidity, that zone of liquidity, and continue back in the direction, right? In this example, back down, because we're anticipating that price is going to move down. Okay, and then we execute. We set our stop loss, and we just start to breathe. That's it. You gotta breathe. If you take a loss, take a loss. You document that, and then you figure out, what did I do wrong? Okay, if you take a win, you also document that and see what you did right. Okay, that's it. Hector Rodriguez, peace, love.